Great day, great day, great day. Welcome to another video. So last video we discussed Tesla's earnings and Google's earnings. They actually reported today after market close. So in the previous video, we did a Tesla trade and we did a Google trade to take advantage of the moves in both of those stocks. So if you want to know those plays and the positions that we took and how they worked, go back and watch those videos. Check it out. Let me know what you think. Today, we will look at Meta, or better known as Facebook. They report earnings a week from today. So we're going to use the TradeTonic platform to find an opportunity where we can take advantage of the volatility or the price moves of Meta and see how we can make money in that trade again. So again, welcome back. My name is Prosper Jonikin. I'm a former hedge fund manager and now the founder of TradeTonic. TradeTonic is an options intelligence platform that provides high performance options intelligence that converts macro and quant insight into consistent high conviction trades. All right, so we're here on the TradeTonic site, tradetonic.app. We're going to go ahead and log in. So we'll log in here. So now that we're on the TradeTonic dashboard, let's take a look at the earnings report for Meta. So as usual, I like to go to Morningstar. They have some free reports that are out there. So if we're looking at the latest article by Malik Ahmed Khan, who is an analyst at Morningstar, you can see his name here. But at the very base, and this is something that I noticed, that he has a fair value estimate for Meta of $850. Now the stock is trading at around $630, give or take. So he has a 4-star rating on this. And what to watch for the Q2 earnings, they're looking for any additional commentary on Meta Compute. We think investors will be asking questions and waiting for official commentary on whether Meta will formally transition to help quell some concerns about AI return on investment. They believe Meta's free cash flow will be hit hard this year, but the firm's initiatives to shore up its finances by cutting some operating expenses are very important. Then, of course, there's some talk around the ad sales. They're looking at the firm's Advantage Plus offering, which has roughly 60 billion annualized run rate. And we believe this ad automation is important as it allows Meta to eat further into the overall digital ad ecosystem. So all these things are positive, right? And this is how they get to their $850 fair value. So we're looking at some fundamental stuff before we start looking at the chart, and then we're going to jump into TradeTonic and look at some plays. So let's scroll down here and take a look at what the bulls say, right? I like to kind of get an idea of what the bulls say and what the bears say. So the bulls say the core advertising business has benefited greatly through improved ad targeting and content recommendation algorithms, as well as a secular increase in digital advertising spending. The majority of the world's internet connected users is accessing Meta's platform, which allows it to access high quality user data, which it can package and sell to advertisers. Of course, we know Meta's primary business is advertising, and the firm has an opportunity to drive ad inventory growth. Now, the bears say that the Meta's investments in the reality labs and generative AI stand to cost the firm billions. So Mark Zuckerberg is known to kind of go to the end of the spectrum or kind of get out there ahead of the technology by tapping into some of the AI features or AI products, right? With the Meta and the glasses with Ray-Ban, or even the ocular or the augmented view devices that you can put on your eyes. And so a lot of investors are saying, okay, these thoughts and these ideas are cool, but are they really turning into capital? And that's kind of what the bears are saying here. The firm has a monopoly case against it in the United States, which could potentially force it to break up, severing some of the scale advantages it has built over time. So what they're saying here is Meta could potentially be considered a monopoly, which I'm not quite sure if that could be the case because there are so many other social platforms that are out there, such as like TikTok, and of course there's YouTube, right? But Meta owns Facebook and Instagram, but I'm not sure if this case has that much merit. So now that we've taken a look at the fundamentals and we kind of have an idea of the fair value estimate, let's take a look at the chart. So we're looking at a daily chart of Meta, and we see that it's mostly been trading in a sideways, trading sideways for the past like almost year or so. We just kind of see here, right? It's just been trading in this sideways pattern. So no real direction, give or take. And right now, just looking at the chart technically, if we wanted to trade the bands between like almost 500 and 800, then that kind of makes sense. So let's go ahead and jump into TradeTonic, right? So now that we have an idea, there's a bullish sentiment on Meta, and then the stock is kind of trading in a band here, in a range here, excuse me. But one thing I wanted to take a look at was like when we look at the earnings of Meta, right? So if we go back to this earnings here on April 25th of 2025, they beat estimates, so the stock gapped up, right? Here's another day where in June they beat estimate, the stock gapped up, right? Now, whenever Meta underperforms with their earnings, the stock drops significantly, right? And so we have another one here where it looks like they beat estimates, but the stock sold off a little bit. So the reason why that's important is because we're not quite looking at the direction. We just want the volatility, right? We want the volatility, especially if we're trading options, because even if we're not right with the direction, we can be right on there being an increase in volatility and we can make money from that. So we're going to tap in into the dashboard here at TradeTonic. You guys are probably familiar with this already. You go ahead and log in. We go to our dashboard, right? And we're going to take a look at the earnings tab. And so right here we have Meta for July 29th. Again, that's a week from now. And so let's look at the strategy builder for Meta. All right. So we know that historically, whenever Meta has had earnings, whether it was a beat or a miss, the stock has gapped up, gapped down drastically, right? And so we know that the earnings is on the 24th. So we can do some call options some options to expire on that Friday, the 31st. So let's choose the 31st as our expiration date, which is the last Friday of the month of July. And let's just pull out some volatility plays, right? And so in this particular environment, we know that let me go back here really quickly. So we know that we're in a late cycle, um, calm volatility environment, right? And so we know that there are particular plays that usually work in this environment. And a few of those plays is the strangle or the straddle, the collar, or bear put spreads, or just some hedges, right? And so we're going to take a look here and see what the strategy builder will give us before we tap into like the top plays or the quant lab to see if there's something in regarding Meta with an expiration of next week or sometime after next week. All right, so we're going to go back to the strategy template. We're here on the volatility, and let's see what the plays are. Right, so if we click on a long straddle, and let's make sure that we change the size of this. We want to make sure we're just looking at one contract. All right, so conservative, one contract, right? So this is telling us that we can risk $5,000 or $6,000, excuse me, for one leg or two legs with one contract each leg, but the max profit is, unlimited, right? But depending on where the stock slides, positive or negative in percentage range, then there's an actual return. So what the model here is telling us that we can take a look at, we can look at the 630 strike calls, which is almost right there at the money. Like I said, the stock is at 627. And we can look at the 630 strike puts, right? So it's telling us that we can buy the 630 strike call for a premium of $28.88 or $2,888 for one contract. And then we can also buy the 630 strike put for $3,073. Now the reason for this is because we are choosing to not be determinant on the direction. We just want to be specific on the volatility. And so if we kind of come here to not the options chain, right here, right? And we take a look at the max P&L. And if we look at this graph, we can see here that if Meta moves more than 10%, then our position is in money. And if Meta drops by more than 10%, then our position is in the money, right? And so what we're saying is if Meta can at least go from 630 to maybe 660 or 670, or even drop below, 640 or 620, as long as we can get beyond that range of 690 on the high end and then 570 on the low end, then we should definitely see ourselves in a profitable position, right? And so the further we go out, like a 15% move or a 20% move, then it could make some sense. So that's the long straddle. Let's look at the long strangle and let's see what the P&L is for that. So we're risking a little bit less money, right? We're risking a little bit less money, and the stock doesn't have, I mean, it has to make similar moves because we're using the 660 strike call and the 600 strike put, but we're risking less money and there's the same amount of profit potential, right? Because if we go back to the straddle, we had to risk 6,000, but the max profit was infinite. If we go to the strangle, we risk 3,400, but the max profit is infinite, right? Let's look at selling the straddle. Now, with this, we're saying that we want the stock to basically stay within a 10% move because we're short the straddle, right? So it's just a reverse of buying the straddle. So basically, we're saying that we don't think that the stock is going to go below 570 or go above 696. So if we go back to the chart and we take a look here, we see that we have some support here around 580. I wouldn't say this is major support, but this is definitely like a zone area, kind of like right in here, right? So this is the 570 area. And then on the high end, 689. So 689 or 700, it's like right in here, right? So what we're saying is if we want to short the straddle, then we would think that Meta would continue to stay within the band that it's been trading in since April. And now we said that if we go back and we look at the earnings, Meta usually gaps up or down. Now, mind you, that's only from now until next week. What happens after that doesn't really matter. So if on earnings, the stock gaps down to right in here, but it stays within that band, we'll still make money. Or if the stock gaps up and it stays within this band, we'll still make money. Okay, so we have to keep that in mind. So we were looking at the straddle. Now if we look at the short strangle, the max profit is 34.33. The max loss is infinite. So, and now let's look at an iron condor, right? So an iron condor, that doesn't really make sense because the risk reward is about 1 to 0.8. Now, let's look at some directional trades. We could do a bull call spread, or we could, risk 1140 to make 1860. And then I wouldn't say we would have a direction on this. So just looking at these, just off the top of my head, the one that probably makes the most sense is a short straddle. Now, mind you, the risk that we could potentially lose is significant, right? The max loss is infinite. And the reason why that says that is because we could potentially have a call on the put, but that's if we hold it to expiration. Most times these options are not really exercised, especially if we're just doing one contract. We don't have to worry about the option being exercised, but we have to actually the the reason why this says is it's infinite is because it's assuming that the stock could go to an infinite price, and then we sold the put option, and that means we have to buy the stock from someone at that infinite price. So this is just theoretical. um, I don't know if the max loss is really infinite, to be honest with you. Now, our max profit is what we get for the credit of selling the straddle, right? Now, if we let's keep that in mind. So the short straddle is something that we like, but if we go back to if we go to top plays, and let's see if Meta is on here. All right, so Meta is on here, and this is exactly what I was looking for. Okay, so I wanted to look for something like this, where it said that Meta has an extreme, it's IV rich, right? So that means the implied volatility is greater than the realized volatility. And the reason why that's important is because Meta's IV is 36.5% versus the realized of 22%. So options are 66.1% rich, which is extreme severity. Okay. And so the reason why this is important, and it tells us here that short strangle, iron condor, or credit spreads align best with this structure. And I think that's exactly what we were looking at. We were looking at either shorting the strangle or shorting the straddle, right? And the reason why that's the case is because we're selling the volatility that's baked into the option. So we're selling premium. And that's why I like the short strategy on this. So there's implied volatility that's baked into it. It's greater than what the realized volatility is. And this is really good insight here. I'm sorry, that's Coinbase. It changed. Here it is right here. So I was looking at the wrong one. So it's the same thing. I scrolled up a little bit. So yeah, Meta applied volatility is 36.5 versus realized of 22, and the options are 66.1% rich, right? So iron, we can buy an iron condor or we can do credit spreads. So if we go back to the strategy builder, and we're going to take a look at Meta, again, we're going to take a look at the July 31 strike because the earnings date is Wednesday, the 29th. Okay, and these expire on Friday. And we're going to take a look at volatility. And so now our research says that we can do the short strangle or we can do the short straddle. Now, me personally, I think selling the short straddle is a better opportunity, right? So the short strangle is a 50% probability of profit. The short straddle is a 47% probability of profit. But our max profit is $6,000. So essentially, we can sell the premium, which is rich. We can sell the volatility in Meta right now, assuming that we think that during when earnings happens next week, the stock stays within this trading range of around 700 to 580 or so. And if it does, we'll keep all of our premium. But if it goes outside of that range, then we may not keep the full $6,000, right? We have to buy those options contracts back because remember we're short in this position, so we're selling the 630 call and we're also selling the 630 put. So I like this trade. We're going to add this trade to our portfolio, and we're going to make sure that we keep the risk limits within, right? So we're going to risk $6,000 on this trade. Well, we'll get a credit of $6,000 on this trade. The risk, we really don't know. It's theoretically infinite, but we can always close the trade if the trade is not working in our favor, right? So we're going to go ahead and add this trade to our paper trading portfolio. We're going to go to our paper trading here, and we'll see where that trade is queued for a credit of $5,961, right? And when the market opens in the morning, this trade will be executed, And what we'll do is we'll wait until earnings between now and when earnings happens next Wednesday to see how this trade will work out in our favor. Now, if you're like, you know what, I want to actually wait until maybe Monday or Friday of this week, which you can because today is Wednesday, July 22nd, you can wait to see if there's going to be more volatility baked into the underlying price for Meta as it gets closer to earnings. And you can sell that volatility. We're going to go ahead and put the trade on today. Be sure to stick around, come back, watch the results of the Meta trade. Also, if you made it to the end of this video, do me a favor, like, comment, and subscribe. My goal is to get to 10 subscribers by the end of the week. I'm at 7 right now. So share the video, subscribe to the channel, because I'll be on here giving you guys top plays, high conviction trades, and helping you make money, right? Who doesn't love to make money? Okay, that's all I got for today. I'll see you guys in the next video.